All right, let's jump right in. We are talking about what could easily be the single biggest event for the market this quarter, Nvidia's earnings report. You can feel the pressure building, and honestly, the results here could send shockwaves through the whole tech sector. 34%. Just let that sink in for a second. That's how much Nvidia's stock has already shot up this year alone. When you see a rocket ship like that, it creates these massive expectations and begs the one question everyone's asking: can the company's actual performance back up all this hype? So yeah, that massive stock run basically sets the stage for this incredibly high-stakes moment. This earnings report, it isn't just a regular update. For a lot of people, this is a real moment of truth. And get this, right before this all goes down, one of the heaviest hitters on Wall Street decided they weren't going to wait and see. Nope, they made a big public move, showing everyone exactly how they think this is going to play out. And that big player? It's Goldman Sachs. And they're not just kind of optimistic, they've placed a really confident bet that's making this whole situation even more intense. Here's what that confidence actually looks like. Goldman went ahead and boosted its price target for Nvidia up to $200. That's an 8% jump. And they're sticking with a strong buy rating. I mean, this isn't some small adjustment. It's a really bold statement to make right before the numbers come out. And just listen to the wording from the Goldman analyst. He says they expect Nvidia to deliver better than expected results and raise its guidance. Now think about what that really means. He's not just saying they'll hit the target. He's betting they will blow past it and promise even better things for the future. That is just incredibly bullish. But okay, that begs the obvious question: why? Why are they so confident? What are the specific things that expert investors are going to be hunting for in this report? Let's break down what will decide if they're right. Turns out this whole complicated situation really just comes down to three critical areas. These are the things that big money investors are going to be absolutely laser focused on. If Nvidia nails these, the stock could soar. But if they miss, well, that 34% gain we talked about could be in real jeopardy. So here they are, the three keys to watch. Number one, the timeline for their next-gen chips. Number two, their game plan for China. And number three, what's going on with their profit margins. Let's dive into that first one. First up is all about the future. Investors need to see that Nvidia's innovation pipeline is just humming along. They'll be listening for any confirmation that the new Blackwell chip is still on track for production in late 2025. And they'll want to hear about what's even further out, this Rubin architecture in 2026. Any sign of a delay here would be a huge red flag. The second key area, well, it's all about navigating some tricky geopolitics. And that brings us to a very specific product, the H20 chip. You can think of this as their custom-built solution, a special AI chip designed to follow U.S. export rules so they can keep selling into the absolutely massive Chinese market. So the real nail-biter for investors is all about execution here. Is that H20 chip going to launch on time? And the million-dollar or, billion-dollar question is, how much money is it actually going to bring in? The answer is going to tell us if Nvidia has managed to thread the needle and protect its business in China. And, that China plan leads us right to our third point, profit margins. See, Nvidia makes insane profits on its super powerful high-end chips. But this new H20 chip, it's a bit less powerful by design. So the big worry is, can they sell a ton of these new chips without wrecking their overall profitability? Protecting those sky-high margins is absolutely crucial for their stock. Okay, so we've covered the strategy and the key things to watch. Now let's just zoom out to the final stakes, the actual billion-dollar numbers this all has to add up to. Because at the end of the day, this is what it all comes down to. Wall Street has its scorecard ready. The consensus is that Nvidia needs to report revenue of at least $4.57 billion and earnings of $1 per share. Those are the magic numbers they have to hit. And this is exactly where our story comes full circle. Hitting these numbers, or like Goldman Sachs is betting, beating these numbers is everything. It's the only thing that can really justify that incredible 34% stock run-up we started with. It all comes down to this moment. So we're left with this one last huge question. The bar is set incredibly high. The strategy is complex. The numbers are massive. Is Nvidia set up for a monumental win that sends its stock to the moon? Or Are the expectations just too high, setting the stage for a really painful fall? The market is about to give us its answer.